Hi there and welcome to the Man Show. In this video I'm going to review the infamous day of 6th of May where the Dow dropped around 1,000 points and to show you how to manipulate the markets, how everything comes together and how the big players manipulate the markets and the excuses they come up with that really just insult the intelligence of the ones who are seeing it. Before I do that, I would like to review my website, the Man Show. Just for a quick review, here in the home page you have the trading log right here, where actually in the last week I've made the first 3 trades, live trades, 1 for each day, and 3 right trades, so 3 out of 3. Here in the quote news section you can have live quotes from market indices, leading stocks, currency exchange, live commodities, economic calendar, and news of all kinds. In this part, the leisure part, you can have some fun, some relax, and this is my new section. It's the search area, where it's really another replacement for the Google page. Here you have Google, Yahoo and Bing. You can search one of these 3, and on the sidelines you have everything in the reach of 1 click. You have your email, you have your social network, multimedia, portals, magazines, news of all kinds around the world. So I think it's could be interesting home page for you if you wish. Okay, so now back to the real story. So what were the explanations they came up with? Actually they came up with 2 explanations, 3 explanations. One was fat fingers, meaning that as posted here, according to multiple sources, a trader entered a B for billion instead of a M for million. Okay, and it says it was a erroneous trade by Citigroup. Okay, well, this is the complete BS. Okay, and I will try to show you why. So this is one of them. The second one was because of the lack of liquidity in the markets, and you have the nice CEO explaining right here. He says that basically the NICE can quote something, the NASDAQ can quote another thing. Okay, and while the NICE can stop the one stock to trade for 30 or 1 minute, 30 seconds, 1 minute, the other ones do not do it. So you imagine you have 2 sellers or 3 sellers. One of them, usually the biggest player, then stops trading that stock, but the other ones will continue trading the stock, and as the liquidity is much lower, the volatility in it will increase exponentially. So if someone tries to sell something, it will only go to those players, and when someone sells, like a big firm sells something, nowadays they don't send it just through NICE, they send it through a complex order that goes and search every single player in the market and sells to the best bid. Okay, so if there's not the biggest player around, it will go to the other ones, and it can decrease the price very rapidly because there's not anyone to buy. Okay, this is the other explanation. And the third explanation was about Greece. Okay, so let's try to analyze one by one. The Citigroup, the fat finger. The B instead of a D, instead of an M, they must be talking about volume for sure, not shares, because you don't send some 2 billion shares of PG without some computer protection. Okay, so you don't send it like that. Okay, and even if you send like 10 billion shares of PG to sell, what would happen? We need to think a little. Okay, if I make an erroneous trade on something and I send a lot of shares to sell, it will drop like a very straight line. Okay, it will be a drop in a second or 2 seconds or 5 seconds, even 10 seconds. If it's in order to sell at the best, it will go to the zero. If it and if it doesn't find anyone there, it just stays there. Okay, or it's cancelled, but it will go to zero and find shares to sell. It wasn't this what happened. Okay, why? It's very simple, because PG didn't drop vertically. It dropped a little by little and then dropped big, but not vertically. Okay, so but this is PG. Okay, so PG is not the market, and it doesn't even influence the market like they say. Okay, just for the record, PG is a $176 billion company, not the biggest in the market. There are several bigger ones, and PG doesn't move the market like this. Okay, they are saying PG made the market drop 10%. Okay, this is complete BS. I will show you also why. Okay, this is the another thing. The stocks do not make a future move. It's the other way around. Okay, if a stock is dropping, is because the future of the index, in this case, is dropping. Okay, they are blaming something, that one stock or two stocks or three stocks made the index go lower. Okay, it's of course if the stocks go lower, the index go lower. But what happened first? It wasn't the stocks like they say. Okay, if you can see here, this is the future right here, this one on the right side. This is the future of the S&P. Okay, and if on the day in question, if you see it here on the very low, okay, it was at 1445, and the low in the index was at 1446 1 minute later, or some 30 seconds or something. So the future was first, then the index. Okay, the index, it's what correlates with the stocks. Okay, so the future was made before any stock drop 40% or all stocks dropping. Okay, so this wasn't because of any stock, this was because of the future drop, then the stocks followed. Okay, and another very important thing, PG did not drop, did not make the 10% drop, of course. Why? Because PG began dropping here at 1440 or 39, around here. Okay, at this hour the stock market was already dropping more than 400 points, so it wasn't 1,000 points by one stock. Okay, this is not right. If you see it, this is PG on the day. They have cleared some trades, so you have this one, the last candle at 1439, and then the next candle 3 hours. Okay, so if it was a one drop, like a stone, like vertically, 1 minute after, the stock would be up. Okay, it wouldn't be like a 20 minutes delay. The stock went down bit by bit, and then a big downward move until the 40s, like they say. But it wasn't PG or 3M that made any of this. Okay, this is just sent to your eyes. Like you saw here, the futures made the move before the stocks. Okay, it was not the other way around. Also, if you see the volume that PG usually have, if you see it here, it's here on the top around 500,000 shares. PG does that without the need of a huge drop. Like you can see it here on the 25th of June. Here around the end of the day, it made around 500,000 shares, and you don't see any big spike here. Okay, so this is not because of PG or 3M. As you can see it here, also 3M, the volume 100,000 shares, and in the normal there are days that 3M does that, and it doesn't need to crash. Okay, that is another question. So why there wasn't in some stocks volume? Okay, or why didn't the market makers provide liquidity like they should provide? Okay, and another thing that we should ask ourselves is, why isn't the market like as a one? So this is obviously one thing that can happen very often if the conditions are provoked like this one. Okay, so if you have one player that just stops trading, it's the biggest player with the most volume on that stock, then the other ones cannot have the liquidity to support the whole market trying to sell to buy. And if you add that to the market frenzy of that day, then you have the obvious move or 40% down. Okay,